Transferring wealth successfully starts with asking yourself questions that will give your family a better life now and for generations to come. In this podcast, financial experts John and Michael Parise from Beech Financial Group guide you through eye-opening questions to help you discover the truth about your wealth. Now, on to the show.
Hello and welcome to The Truth About Wealth with John and Michael Parise of Beech Financial Group. I'm Wendy McConnell. Well, how are you guys?
Hello, Wendy.
Hey, Wendy. Good. How you doing?
I'm good. I'm getting to see you a whole lot more than I used to. Let's put it that way.
Yeah, we're catching up with you guys.
Yeah.
Makes me happy.
We're banging these podcasts out for sure.
So what are we going to be focusing on today, guys?
It's going to be a little bit of a topic we were not, I don't want to say as prepared to talk about, but I think it'll be a good podcast nonetheless. We're talking about more investing focus and thinking more generationally how families can sort of stay together or come together from an investment plan. So we're talking about like family investment clubs. These are some things that some of our families like to look at. And it oftentimes comes into play, I think, when you have more business owner families running privately held companies. From our experience, very often they have other assets that end up becoming almost a secondary business, like real estate. They might have an operating company that maybe one or two or members of the family are really running, and then they have these real estate over here that they've accumulated over the years. And so really what we wanted to talk about today was really just how you can maybe think differently about investing your assets and then again keeping the families together. And we'll probably tell you a little bit about what our family does and our story as well. So family investment clubs is something that's a little different today. But Dad, I don't know if you have any thoughts.
And that's a real thing. That's a real,
that's
a term.
It's a term. I think we sort of coined it. I don't know how. Yeah, I don't know. I don't know if we need to trademark that now. We probably need to do that.
$3 on that one, Larry.
I don't know if there's really a term for it, but it is something that almost, again, I think by default families end up sort of coming together with this investment club. But if not, it's something that we have talked to families about, and as a way to, again, bring other members of the family into the fold that maybe aren't, let's say, running the family business all the time. It keeps them involved, and it also teaches them, how to really run a business, how to run other assets.
Yeah, it's more of an education thing. I mean, that's how I communicate it. It's teaching the next generation kind of the investment side of the family. Because if you understand the family office world, it's really, when someone says I run a family office or I work for a family office, it's really just the investment side that says, okay, this family comes together and they buy assets and they buy companies, they buy real estate. And the family's usually involved in that decision or not. Now, usually they're not. Usually they hire an investment specialist to make all those decisions for the family. And the kids don't really get involved with them sometimes, most of the time, actually. So this whole idea is, let's bring the kids in. Let's educate them how to run a real estate project or how to change toilets if they need to, something breaks in the building. Get the kids involved with running the complex or running the building to teach them a responsibility to that asset as a potential goal. But it's also bringing the family together, to Michael's point earlier, where we work with a family now on the West Coast, and actually all our families, they have grandkids and kids from grandma and grandpa kind of all work together. So the kids of the generations that we work with, and this family has 3 families we work with, all have different kids. So we want to bring the kids together and say, hey, let's take $1 million in the trust and let's form an investment club. So all the kids get involved. They pick stocks or they want to buy a piece of real estate, and they all do it together as a strategy, not only to teach them how to run a project, but also get them connected more closely with the family. And we're getting a lot of excitement, especially with that family on the West Coast. They're going, this is great stuff. So it's a teaching element as well as having them be responsible for the future asset they're going to collect somewhere down the road, whether it's in trust or out of trust. It's just a better way to manage wealth generationally. That's just our kind of model. Let's talk about our family, what we do. I think might kind of tie the pieces together.
Yeah, I think, before we get to that, just because you brought up, I think, a good point, is really thinking about the family enterprises, I
Right.
think, may be a good way to really look at it. And you have a lot of different assets within that enterprise that you might be working with. Again, a lot of the families we work with, they're running operating companies, closely held businesses. But again, they might have real estate over here that they've accumulated over the years. They might have marketable securities in an investment account someplace. All of those together are really the family's enterprise, and they need management. And maybe you want to call it a family office, is the term that's very often used, but it's really, I think, more of a family enterprise. And so which family members really work within each of these, I'll use the term divisions within the family enterprise. But yeah, I think to talk about our family, so obviously we have Copper Beech as a business. My father and I work together on that, but we also own other assets. You've accumulated some real estate over the years that you have rented out. And so that's one asset of our family enterprise. My sister also, how was it, 10 years ago? I think it is 10 years ago now. Actually started our sort of our secondary enterprise as a family, operating Pilates studios, being investors in a Pilates studios franchises. We have now 5 of them. So we've now, as a family, we've accumulated different assets within our enterprise that need to be managed. Now we have some partners in our Pilates studios. They do a lot of the day-to-day management, but there's still a lot on our side as partners that we get involved in, things like visiting new sites and looking at leases, negotiating with landlords. We're trying to come up with the capital to be able to make that new location happen. So there's a lot of things that go into running a business within our enterprise. And I know that there are listeners out there that are probably far more complicated than our business enterprise. But we actually had at our last family meeting, we had more discussions about that because
That's pretty cool.
now, again, it was my focus being Copper Beech, although I'm still involved in the other areas of our family enterprise. Having my sisters and other family members kind of help out with that has been really helpful for me and trying to manage that enterprise together. But it's also gives them an opportunity to really put their stamp on our family investments as we grow them and as we sort of matriculate down the generational line. And it's also giving them that education as well. So I don't know if there's anything you want to add to that, but that's kind of a little bit of an overview of how we structure things.
Yeah, and I'll support Michael here for a brief second here. Michael's done all of it. And as our family have grown our specialties, Michael and I had a conversation one day. He says, it's time to get the girls involved because I can't do it all, run the Copper Beech platform and run all these other projects because he's always on calls with these other projects. And my daughter stepped up and said, yeah, we're in. So my oldest daughter was going to go to New York with us a couple of weeks ago to join in the meetings with our team out of New York. So they're willing to get involved, but they're also interested because we did our family meeting. We showed them all the schematics and all the assets we have as a family. And they were fascinated by all the different intricate pieces of it. And my younger daughter asked me about my coin collection the other day. She'd like to know more about the coin collection that I'm leaving my grandchildren, because that's really that asset class I'm earmarking for the grandkids. So Michael or the girls one day will be in the position to auction that coin collection off or get them involved collecting more coins. So we have a bunch of moving parts that now we're bringing all our girls in and being responsible for a lot of it. And also just education on how to distribute or how to sell it somewhere down the road, or because right now they've been void of that. So Michael's now is taking a big deep breath, saying, God, thank God my sisters are involved. But anyway, so Michael's done a yeoman job through the years helping me build that out. As we get more assets in our portfolio, it's going to be now the girls are going to be part of that. And they're also part of our trust. So they're all in the same camp, all in the same sandbox. They need to learn and we need to teach them. So that's our kind of family story. I don't know if that's any more of that.
No, I think as you're talking here, I think that it's important really from a lot of most of our families, as I mentioned, are business owners. They run companies every day. And as somebody that has worked with and advised closely held businesses for, in my case, 15 years now, it's really the one thing that I love most about working with entrepreneurs is how well-versed they are and varied they are in terms of their knowledge. They've had to, as start their businesses, they've had to learn so many different things, not just whatever craft or business they're in, but they've had to learn about taxes. They've had to learn about, laws and regulations depending on their business. They've just kind of gotten this vast amount of knowledge that I think you only really get when you start and run a business. And so as you're talking here, I'm thinking about, again, the educational piece, to think a little bit differently in your family about how maybe you can transfer that knowledge to the next generation, but maybe you have somebody in your family that isn't working closely within the business. Maybe this is a good opportunity to get them some exposure. Say, hey, maybe you can take our real estate portfolio. Maybe you can try to work with, maybe we have some managers. You can work with that. You can help them understand a little bit more about what we want to do as a family with those assets. And at the same time, you can learn about how to run this and manage this, because again, most of our families, it's going to be the next generation's responsibility to manage that at some point. And so why not start that now and really get that investment club kind of mentality going and this family enterprise mentality going sooner rather than later?
It smooths things out. It puts everything on the table now before it's forced to them because someone passed away or the trust is now being implemented. So you start that education as early as possible. Matter of fact, I was dealing with a client in Phoenix just the other night where I was working with his son and we're talking about the markets. And again, we've been working with his family, 15 years?
Yeah. Yeah.
And his son's old enough and he's buying all these stocks, whatever. And he's concerned about the market. So mom and dad and I were talking about their portfolios and we're holding in hold position because the markets are volatile. Well, he wants to bail out of the market. And we had this great conversation about, well, that's okay, but what's the impact of that? Have you thought through the tax ramifications of that? Because he's up 70% since he bought these portfolios. So if you think about selling out of those positions because you're afraid of the market and put it in cash, well, you get a tax liability. So that hurts the rate of return on your investments because you have to pay tax on it. So we went through this buy and hold kind of a strategy, and he's 34 years old, I guess. I mean, he's got a lifetime. So hold on, they're good. I said, are they good companies? And they're all great companies. So they're not going to disappear. So we had this great conversation, and he agreed after an hour conversation, he was going to hold on. He's going to sell one stock position because he doesn't like the stock anymore, but he's going to hold on to other ones. So we just had a great conversation. I probably saved them about $20,000 in income tax on those gains. So people have to think through how they manage these structures. But a lot of good input goes on. What's the impact of managing this? What's the tax ramifications? What's the inflation issue? What's the cash flow? Is it tax-free? All these strategies, if you think about that club, they learn a great deal about how to manage portfolios. So it was a lot of fun. It was an hour and a half conversation. And I turned them. I taught that younger generation, they're a bunch of cowboys. So I said, you got to keep the tax man away. And for listeners, they're probably thinking about the same thing. We just had a 15-year bull market. And all of a sudden we get a little volatility. And the first reaction is, well, I want to secure all my value. Well, if you sell out of that portfolio, you're going to get a big tax hit. So you have to be careful when you go through those discussions. And we're advisors to that family. We look at generational wealth, not the next wealth of the next 2 years. We want to generationally keep those portfolios managed appropriately for the long haul.
Yeah. One thing that I was hoping you can touch on too, Dad, because you, I think, tell the story really greatly, and not in this specific context, but more in the family foundation context, but where it's keeping the family together in terms of having, and again, the family you tell the story about is more in the family foundation context, but I think you could pretty much use it within this investment club context as well. But I think it might be helpful for you to talk about that family, what they were trying to accomplish, again, in the family foundation standpoint, which of course it still works in this concept, but also maybe in the investment piece as well. Yeah.
In one of our podcasts in the past, we've talked about this case, but it was a great learning curve for me working with a very, very sophisticated client out of Chicago. And his whole goal was he was very philanthropic and he wanted to give his money away or part of his assets away to the charitable causes that he loved. And one of the things we talked about is, well, how do you do that? Well, there's a lot of different ways you give money to charity. One of the ones he liked the most was a charitable foundation in his name. And his logic was he wanted to keep the family name in the Chicago area. And his term was, I wanted to have a power base for my children. Because you set up a foundation, you have to give money out every year from that foundation by law. So if everybody in the community knew that there's a requirement to give out. Everyone was going to be able to be very friendly to my children because they wanted to get a benefit from the foundation. So it was the way he looked at his community. My kids could get benefit, the charity would get benefit, and we could set the strategy up. So one of the conversations we had was, well, one of the ideas that he was concerned about was, how do I keep the kids together? Because when mom and dad go in families, the core of the family, now it's just the kids are there. So they got to learn to get along. So part of the foundation was, okay, when the foundation gets created, each one of the 3 kids were going to have a responsibility, and it rotated every year. So one child, I think her name was Amy, she was going to manage the administration. She was going to do all the paperwork, all the filings of returns, tax returns if they were required, and just the flow of assets. The second son, I can't recall his name, he was going to pick the investments for the foundation. And the third son was going to distribute the assets. And they rotate that every year. And Dad's goal was, if you understand how the family foundation works, you could charge a fee to the foundation for the management of it. So I think it's about 0.5% of the asset.
Usually the reasonableness of the fee.
IRS allows you to take a reasonable fee out. But he did, whatever that fee was, he went and took the kids to the islands every year, and they had this foundation meeting, and they all managed the activity of the foundation for the value that it created for keeping the family together. He thought it would be very sticky to keep the kids together, being responsible for what mom and dad set up. So to your point, Michael, it was a great strategy. And again, to your point, you could do that with just a regular portfolio. They could rotate who's filing the tax returns, or who's doing the research on the stocks that they're picking, and who's doing the reporting of the performance of those stocks. So it could be a whole strategy. Again, the focus is to educate, keep the families connected, and it could be other families, it could be relatives, as we talked earlier. So the cousins could get together and build this this club, investment club, as a strategy. It just keeps the family together. We love the idea, and who's ever listening, you should maybe try it out with your kids. But they all love it because they learn. They want to understand how stocks work, how bonds work, how certain insurance structures work, how real estate works. Because they're not educated, and they're not teaching that in school, Wendy. They're not. They should.
No, and I have never understood why we don't teach finance in school, because it's something that everybody needs.
Yeah, I think it's starting to become a little bit more popular. Every once in a while, I'll talk to somebody, and they might have kids in high school that are taking like a personal finance elective, which I think is great. Maybe it shouldn't be elective; it should be probably mandatory. But baby steps, right?
Right.
But yeah, I mean, I love that rotation idea, Dad, because that's something that
it's magical.
Again, depending on the asset makeup that you have and the investments that you have within your family, maybe you have one of your children or another family member that, again, they can manage the real estate piece of it, or they can work with the outside advisors for a period of years. Maybe it's, there's all different ways to structure it. Maybe it's every year they rotate, or maybe they have almost like a term for, 3 years, and that's going to be their responsibility. And then they rotate to the next, maybe the marketable securities portfolios, and working with the financial planners and investment advisors to really, track the performance. Those are the things that, again, if you're thinking generationally as a family, and you brought up a great point earlier, Dad, you don't necessarily want to wait until somebody passes away in order to try to have now your kids figure out how to do all that. You can really set things up now where you're building that foundation that, God forbid, something does happen to the founding generation or the parent generation, that it's a much more seamless transition to the next generation, because they already know what's going on. It's a way, we talk a lot about family meetings and bringing the family in to sort of look at all of this. This is a way you're bringing them into the enterprise on an ongoing basis. And not to say you don't need to do a family meeting, but you're almost having family meetings on a much more regular basis, because they're having much more of a hands-on management of those family enterprise assets through this club sort of concept.
Yeah, full disclosure, we had a bottle of wine we were sharing with everybody when we had this conversation with that client a couple of days ago. And what was interesting, we're all sitting around a table discussing it, and the son said to me, well, does Michael think like you? Because Michael's the next gen. He's more connected to, his name is Herman, more connected to Herman, and I'm mom and dad's advisor. So again, getting back to that family, how we work together, the younger generation, I push towards Michael because that's going to be their future, because I'm not their future. I'm mom and dad's advisor for the last 15, 20 years. So, and he said, I'll connect with Michael and share my portfolio with him the next time I meet with him. So we're going to go out there in May, and he wants to meet with us in May just to go over his portfolio with Michael. So now I'm connecting the next gen, and I'm backing away because we have different thoughts on how we manage portfolios, because there's time elements involved here. Like, I manage my money a little differently because of my age. Michael's a lot younger. He's going to manage his portfolio a lot differently because he has a lot more runway to manage and build portfolios. So, and that's, we were talking to the family about the same thing, and he agreed, which is why he didn't sell, because you have years ahead of you to manage these stocks. And let's not be crazy and bail out because there's a short-term volatility in the market and people panic. And I keep reminding you, had a 15-year bull market. The market's only down like 4, but you're up 80. So how much are you really down? You're not. You're still up 75. Right. He goes, yeah, you're right. You're right. He calls me Uncle John. You're right, Uncle John. I didn't think about that. So sometimes people lose their way because they listen to the commentary, they listen to people on TV. The world's going to come to an end. It never comes to an end. I've been through 4 or 5 big downturns in the market in my career, and it's always came screaming back, and we're way ahead. If you just look at the S&P 500, you do your own investigation, it's way ahead. I mean, if you look at the Dow as an example, in 1987, that big crash, guess what the Dow went down to? It's like 1,800, give or take a few bucks. What's the Dow up to now? 34,000? Hello? Yeah. There's proof of the pudding that you just be patient and just stay consistent in your long-term focus. Now, again, if you're my age, your focus is a little differently, but if you're a young age, you have a lot more time. And we were at a conference this past weekend. They talked about AI and the medical breakthroughs of AI. So my grandkids, now this is going to probably freak people out, are going to live to age 150, potentially, because of medical breakthroughs. Now how do you manage portfolios? Right? No one's going to retire at 65. Again, these are all conversations we're having.
Right. That's a lot of planning.
But think about that. So we have a lot of interesting things happening in our society. I didn't get into AI, but AI is going to change everything, and it's not necessarily for the negative. It's going to be for a lot of positives.
Hopefully.
But I know. But for investment purposes, you're going to live longer, so you got to invest longer. You got to stay consistent with your strategy and not be nervous about market cycles. That was my conversation with this family. It was wonderful. We did have a good bottle of Burgundy, which was delicious. And he walked away. He hugged me when he left the room. Great seeing you, Uncle John. Have a safe trip back tomorrow. So that's how we work with our families. It's a lot of fun. And he's going to be calling Michael.
Yeah, no, I'm glad you told me that, because I was not aware you'd be calling me. Now I have a foundation to work from. But you brought up an interesting point that I wanted to touch on too, this concept of like an investment club where, in this case, Herman's managing and he's trading his own portfolios, yeah. Which is not everybody likes doing that, but I think that's a great sort of responsibility for him to do in terms of tracking and to get and learning and education about how he manages those portfolios, right. Because a lot of families, we'll hire people in our profession, hey, go manage this portfolio and report back to me once a quarter. And that's great. And I think that probably overall, particularly if you're at that family office level of net worth and complexity, you probably want to have a professional that's really managing all of that activity on a global scale. But maybe there's a portion of that overall family enterprise where you can section off and maybe say this is the family's asset to trade. Because not only do they have to get educated on how the portfolios work and how asset classes work, they're actually going to be responsible for trading the account. And that could be an interesting dynamic that I wouldn't necessarily recommend for every family, because there's certain family dynamics here, but maybe, and we've seen this, where the one family member that's really managing those assets on behalf of the family, they have to report back to the family on how well they do. That can be a dynamic that you can bring into the fold if you want. So not only are they learning about how portfolios and asset classes work, they actually learn how to trade it. They have to worry about tax exposure, right? They have to worry about market timing, if you want to use that term, maybe to not market time, but they have to be concerned about a lot more things. And again, this is all about education and learning about how these systems work and the markets work. That can be a great educational tool for your family going forward. That a lot of ways you can skin this cat. But as you were talking about that, that kind of popped in my head.
A few years back, another case where the families actually competed. Family A and Family B, they had kids in both families, and they set up these LLCs, and they competed, and they had contests who would outperform and who was the best stock picker out of the two families. And they report back to the family as a whole at the end of the year. So you could do so many creative things, but remember, focusing on teaching. This is all about teaching the next gen to be responsible for these strategies or these opportunities they're going to have.
Yeah.
To help manage the wealth that mom and dad or grandma and grandpa left them. And they need to learn, as we talked a few minutes ago, Wendy, no one's teaching how to manage this. Now there's Robinhood, which is an online service. You can invest stocks and a lot of different options, but that's just a technology. And this Herman was on Robinhood. And if he didn't have that conversation with me and the market turned negative, guess what he would have done the other day? Sell out his positions. So I've saved him in a way on that basic conversation. So although, again, to Michael's point, someone needs to guide these families on those decisions. I wasn't going to fight him saying, don't do it. You're crazy if you do it. I'm going to educate you. This is the tax impact. Have you thought it through? What are you trying to accomplish? Let's put the data down. You're 34 years old. You have a lifetime to manage this. You have great stock picks. Why are you worried about volatility? And it connected with him. But if it wasn't that guidance that we have with our families, he might have made that mistake. Listen, we're not geniuses, but we're common sense type advisors that say, until you make that decision, you got to know what you don't know. What's the impact on that? And what's the negative and positive in that decision? And we do it with a lot of our planning, but this particularly when you deal with young generations, they don't listen that well sometimes. Not Michael, he's great.
Well, I don't know. It depends on the day. But a lot of times I don't listen to you.
I often kid with my wife. I said, sometimes the generations, when they look upline to the older generation, we're not as smart as the next generation. That's how they look at us. And it's understandable. I remember there was a conversation I had with a client. His daughter the granddaughter was kidding him about, Grandpa, you really, you're not technically sound, with the new technology. And he turned around and she goes, well, we created the internet. And she goes, great. You're right, Grandpa. You did. So he pushed back. We're the ones who created the internet.
Right.
You guys are the recipients of that success that we created 30, 40 years ago.
Did he learn how to use the internet, or did he just create it?
Stop. That's another story.
That's
Michael's point. That's correct. But the generation always, the next generation always thinks the older generation might not have it all together with the newer generation's focus. And it's correct. And I don't disagree with that. But when you come together and you start talking about it, you have a lot in common. And when you have wealth, that common thread is we have this opportunity to continue to grow this wealth for the next 2 or 3 generations. That's our focus with this educational platform. It narrows down to that. And not every family does it, but we suggest it as part of our model. And so far, it's worked out pretty well.
Yeah, and I know we have a lot of advisors in our industry that listen as well. And I think that this concept might be a little foreign to them too, because a lot of advisors in our industry, as I mentioned earlier, they usually like to manage their portfolios themselves. That's how they, generate their value and their fees and all of that. And I think that that's great. But I would also maybe challenge them is you could really do what you did with Herman, which I think is great, is let them manage their own. Maybe again, it doesn't have to be everything, but they might manage their own little section, and you can guide them. You can be that counselor. You don't necessarily have to do it all yourselves. And I think there's a lot of value in delivering that to your clients as well, which is, again, might be a little foreign for some advisors, but I think it's a way that you can not only deliver value, but differentiate yourself as well from every other advisor that's out there. So just something to think about as well.
Yeah, I think what we are really good at in a very simple way is we never tell any of our clients to do anything. We educate them on their options and how it fits their particular customized plan for their families. Because there's a lot of good answers to a lot of questions. There's a lot of good ways to look at how to strategically do things. We don't want to tell anyone because we're biased a certain way for what we do at our family. That's unfair because it squeezes them a little bit. All we do is, okay, here's 5 ways to do this. Which one you're most comfortable with? Let's give you the pros and cons on it, and let's move forward. We never tell the clients to do anything. That sounds kind of crazy, but as advisors, they look at us as the smart advisor team. But the smart position is educate and teach on options and things they should consider before you make that recommendation for them to take action. That's I think what we do really well as an organization. Again, I'm not bragging here for a second, but that's all common sense stuff to us. It's hard to make that decision when someone says, "Listen, I don't do this for my family. I don't think you should do it for yours." That's really unfair because your family situation should be totally different.
Right.
So you get to this investment club strategy. Not every family is going to adopt it. Not every family is going to be patient with it or want to adopt it. But we just suggested it might help with the communication, with the responsibility, with the education. If they don't want to do it, that's fine.
Yeah.
Yeah. We're not going to get mad at you. It's just we share best practices is a good term we like to use sometimes.
Education, that's the key, right?
Yeah, it's
what it's about.
And it's getting harder because there's so much data out there. And I know we talked that on a few podcasts. There's so much information out there. Clients get confused. They get advice from 15 different people, and they're stuck in the middle. That's the term we've been using for 15 years. People are stuck in the middle trying to figure out which way to go. We try to make it as simple as possible to take action, but they need to have their options on the table. Because you don't know what you don't know. You'll hear me say that, Wendy, another 100 times, I hope. But that's really how it works. If you don't know something, do your research, but not everybody has time to do that.
All right. You got to get on that trademark now, guys.
Yes, I know. I'll be doing that as soon as we're finished here. No, I think this was great. Hopefully this is helpful for listeners and maybe just thinking a little bit differently about your family enterprise, maybe how to get other family members more involved in that family enterprise. Again, a lot of the families that we work with have operating businesses, and not every family member or child is involved in that family business. And, that can create different feelings and dynamics between siblings and things. And this might be a way to really help to bridge that, that gap, if you will, bring the family together and then educate everybody in the same whole vehicle here. So.
Yeah, and by the way, just to backtrack to our family meeting, and we do that with all our families, the best thing we get from that is the kids get clarity what mom and dad or grandma and grandpa are doing. I know we talked about that in the past, but it's imperative you understand that that's the focus of that, because usually the older generation doesn't let people know from the next generation what they have. That's a mistake, we think. But again, we're not trying to tell you what to do, but we think it's a mistake. My kids are they're really appreciative. Dad, Mom, you've done great, and you've set all these wonderful things up. For our kids, this is great. We're excited about being involved. It's that coming together as a family generationally. And that's how we create 100-year families. That's my close.
Okay. So if people do have some more questions about what we've been discussing, how do they get in touch?
You can reach us on LinkedIn, and both my father and I and Copper Beech, we have our own LinkedIn pages, so you feel free to reach out to us there. You could also reach us on our website, www.cbfgllc.com.
All right. Well, thank you, gentlemen. It was always nice to see you.
Pleasure,
well.
Wendy.
You too, Wendy.
And thank you for listening today. Please like, follow, and share this podcast with your friends. Until next time, I'm Wendy McConnell.
Thank you for listening to the Truth About Wealth podcast. Click the subscribe button below to be notified when new episodes become available.
This material is for informational purposes only. Neither Osaic Wealth, Inc. nor its representatives provide tax, legal, or accounting advice. Please consult your own tax, legal, or accounting professional before making any decisions. Copper Beech is not affiliated with Osaic Wealth Incorporated. Securities and investment advisory services offered through Osaic Wealth Incorporated, member FINRA SIPC. Additional advisory services offered through Copper Beech Financial Group. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth. These opinions are subject to change at any time without notice. Any comments or postings are provided for informational purposes only and do not constitute an offer or a recommendation to buy or sell securities or other financial instruments. Readers should conduct their own review and exercise judgment prior to investing. Investments are not guaranteed, involve risk, and may result in a loss of principal. Past performance does not guarantee future results. Investments are not suitable for all types of investors. Any opinion expressed in this forum is not the opinions of Osaic Wealth Incorporated and have not been reviewed by the firm for completeness or accuracy. Osaic Wealth Incorporated and Copper Beech Financial Group are not affiliated with any other named business entities mentioned.